Hey everyone, this is Alp Actinis here, Managing Director of Architecture and Platforms here at FP Automation. Welcome back to our FP&A series. In this video, we will be covering the balance sheet planning mechanism for our FP&A solution within Fabric powered by Acterys. Before I get into today's video, I wanted to quickly recap on our previous video where we covered balance sheet driver planning, which was an essential part for cash flow planning. In our previous video, we talked all about how our AR, AP, and inventory planning mechanisms are based on our original P&L planning components, specifically around revenue, OPEX, as well as cost of goods sold. The idea behind the AR and AP planning was essentially to allow us to see exactly when cash will be collected versus when cash will be paid out for various different initiatives such as paying vendors, paying for inventory, as well as collecting the revenue owed by our customers. In this video, we'll be talking about the byproduct of that, which is essentially where your team will have the ability to submit all the balance sheet planning activity components from the different modules and use that as a starting point for being able to view the balance sheet as well as the cash flow statement. So as a starting point here, similar to the profit and loss statement video, your team is going to have the ability to be able to submit a particular forecast once all of the balance sheet driver module planning mechanisms have been completed. So imagine now your team has the ability to be able to save results and then leverage all the activity planning that has been used across the balance sheet and immediately see those results showcased within the balance sheet itself right here. And again, we're seeing the activity component of the balance sheet here. Now, the other thing to keep in mind is we also are going to have the ability to be able to influence other components right here, such as the ability to be able to make investments potentially, as well as issue stock or potentially buy back stock. So the idea behind the screen right here is a lot of your components for balance sheet are going to be driven off of other modules, and we don't want to be able to change those accounts. Those are going to be submissions from other modules. But in situations where maybe, for example, your company is going to be issuing stock, again, raising money, let's say, for example, $500,000, we can immediately go ahead and save those results, which ultimately will be changing the total activity of the business right here, showcasing what our total liabilities look like, along with equity. And you'll notice right here that if we look at the activity, liabilities and equity, plus the assets or minus the assets, they're exactly tying. And that's because we are continually updating cash activity based on various different activity components that are happening across our balance sheet right here. So this is important because, of course, we need the balance sheet to balance, but also whenever we are making any sort of adjustments, such as being able to pay off debt, issuing stock, issuing investments, that is affecting cash. So it's important that we recognize that that is a cash inflow or outflow, and that's how we're going to continually have all of our components balancing here. Now, some other views that we have in place right here are, for example, a 12-month forecast. So your team is going to have the ability to see a 12-month forecast. You can also quickly click on any given entity. Maybe, for example, we want to look at one entity right here and see that entity as well as the balance sheet for that entity and what cash inflows and outflows are looking like over time from a balance perspective. So again, if we went ahead and we made an adjustment for investments, let's go ahead and let's do that again. We're going to issue more stock. Let's say, for example, that we're going to be issuing roughly about $1 million in stock within August. Again, there's a dilution factor to that for the business if we're a public company. But if we look right here at our cash is immediately going to increase by $1 million. And then our liabilities and our equities are also going to be offset by that due to us raising additional stock right here. So the idea is that we're able to see all these components and plan right from within the same screen, while also taking into account our other modules that are leading up to these particular balance sheet activity adjustments. We can also look at our data in many different ways. Maybe we want to see a balance sheet from an entity perspective to see exactly where we stand from a cash as well as a liabilities and equity perspective. So what does cash look like across all of our businesses? What does inventory look like? How does long-term debt compare? These are all various different views that can be built and adjusted. Again, you can potentially be using things like personalization, for example, within Power BI to be able to slice and dice your data in different ways. And then for executives and management, another Another great component right here is balance sheet ratios, being able to see ratios over time of various different companies or your company overall. What does working capital look like? Are we in a positive or a negative inflow? Do we have healthy ratios in place like liquidity ratios, cash ratio, quick current ratio, and quick ratio? Again, a good rule of thumb is being above 1 would indicate that you have enough to be able to pay off your debt. How heavily leveraged are we from a debt to equity standpoint? How about from a debt to asset standpoint? And how do these ratios compare based on our forecast, based on the financing that we're looking to take on within our company? And we can see right here that financing is starting to really go down from a debt to asset standpoint, indicating that we're taking on less debt and there's more cash coming in the door, as well as there's more investment being done on assets that are yielding a return on investment for us. So these are all various different views that can immediately be sliced and diced, can immediately be filtered to. And then again, we can look at various different company components, such as one company, for example, and seeing how those ratios are changing. The idea here is that you now have full visibility into your business from a balance sheet perspective. In our next video, we'll be taking a look at cash flow to see what cash flow projections look like for the business over time and how we can use a revolver debt credit facility to be able to bring in an influx of cash if we are running short on cash, requiring us to be able to leverage in order to be able to keep working capital items as well as other initiatives in place, or for us, of course, to take advantage of potentially cheap debt. So thank you guys, and we'll see you in the next video. This is Alp signing out.